So just to say hello to some of the audience people that have joined so far. Hello from Bangladesh. We've also got people from Pakistan, from Leeds, from Bristol, Leicester, Cyprus, Dubai, from Kent, that's where I'm based, London, Mort Kent, Guernsey, Yorkshire. So a very eclectic mix of people from across the globe, which is great to see. We did originally have this event scheduled for a couple of weeks ago in the evening, and so thank you to the events team for that suggestion. We do have about 400 people dialing in today, hopefully, all signed up at least. So if we do have everyone join, that's going to be a very big audience. So when we get to some of the question stage, I do apologise in advance if we're not able to get to everybody's questions, but we do like to make these engaging. So I will be asking the audience questions, or to type in your questions on the chat box as you are at the moment with your details. If we don't get to answer your questions on the actual webinar, we do only have an hour, so we are going to have to kind of go quite fast today just to get all of the conversations in. What we will do is answer the questions post-event and send those out to all of the members that attended. So if you don't get your question answered today, it will be answered, do not worry. So today's topic is digital disruption could make or break the banking sector. We're going to approach this from a kind of a pre-COVID and current COVID situation. Quite ironic, I guess, that today is the day that we've gone back into lockdown here in the UK. Fingers crossed it's only for 4 weeks or a month, but who knows. And also we've got something going on in the States at the moment as well. So quite a monumentous day. Hopefully this will be equally interesting to the audience. I'll like to just start to introduce our panel members, if I can. Sorry, I'm just having to move around the screens at the same time. So my name is Rob Thompson. I'm the Head of Banking Services here at the LIBF, and I'm host for today. And it's a great pleasure of mine to introduce our panel members. I'm very fortunate to be joined by 3 ladies that have varying experiences in retail and digital banking, but also very highly experienced and knowledgeable. So we're really looking forward to hearing their thoughts on kind of what's been going on post-COVID, and also maybe what the future will look like. In terms of the event brief, we know that digital technology was already disruptive from lots of areas, but obviously from a banking perspective, that was before we even knew what COVID was. Obviously now things have moved on at a pace with COVID as well, kind of in making sure that we have to really kind of meet our customers' demands and also be COVID safe at the same time. So lots of external influences at the moment around digital technologies, and really exasperating kind of maybe what was already happening at that time. So moving on to our panelists, I have the pleasure of introducing Chrissy Charafa. Chrissy is the COO of Calgera, which is a social fintech company named in the top 30 tech companies in the UK this year. Well done, Chrissy. That's really fantastic. And focusing on financial resilience. So we have spoken, Chrissy and myself, around about vulnerable customers and how maybe who would have been considered a vulnerable customer before, or may not have been considered before, may now be considered a vulnerable customer, and how some of the banks are really having to engage with customers via digital channels, and that can actually throw out different issues. So I'd be really interested to hear Chrissy's background and thoughts around there. Helen Panzerino. Hi, Helen. Helen is our Associate Director for the Centre of Digital Banking and Finance. So that's a part of the LIBF that is fairly new in its concept and naturally embraces everything digital in the world of banking. So again, Helen has a really great depth of knowledge around some of these subject areas that we're talking today, and has also been involved significantly in our retail and digital banking certificate that has launched recently. And I will be talking about that towards the end of the slides, or the panel event, just really to show we've launched a brand new qualification, and it's in retail and digital banking. Hi to Wendy Chown. I've known Wendy for quite some time. Wendy is an academic specialising in retail banking and also an ex-retail banker, and has also worked with the IBF for quite some time as a senior tutor amongst other roles. So Wendy knows us really well, and it's always a pleasure to see Wendy. Lots of knowledge, I'm sure, from her kind of 3 decades of working in the industry, and is also now an internal coach and mentor through Competa. Actually, no, you've been coaching and mentoring for a long time, Wendy, but your new business, Competa, which provides coaching and academic services, and really keen to hear a bit more about that later on. So that's our panel. Welcome, everybody. What we would like to do in a minute is start with a poll just to engage with the audience and really just to get some kind of analytics that we can use in the discussion. But this is what we're going to be talking about today. And this isn't an agenda or a list. We're going to jump around all these areas, I'm sure, and probably talk about a whole lot more. I'm still wondering how we're going to fit this all into an hour. So I'm going to have to stop talking in a minute. But they're the kind of the key outputs that we're going to be talking about. And equally, make this engaging. Please post your questions on the chat room. I'll probably regret asking for that with 400 attendees, but hopefully some really good questions will come out, and I will be happy to present those to our panel members either during the conversation or at the end with the Q&A. So let's get started. So what we thought would be really interesting is to just get an idea of where our audience is based in terms of demographics. So if Rox in our events teams wouldn't mind bringing up that first poll, if you're happy to do so, please tick the box that you fall within, and then we can kind of see what kind of range of audience members we have across those different generational gaps. So far we seem to have quite a large number from Generation X. I fall into that one, just about. We also have millennials. I definitely don't fall into that one. Some baby boomers. So yeah, fairly good spread of different age ranges there, and that will really help us with our next question. So thank you for providing that input. So we seem to have Generation X. There we go. We have the highest percentage there, closely followed by millennials, then baby boomers. So Rox, if based on that, bearing in mind, just make a note of kind of what we've got. If you wouldn't mind going to the next question, do we need to just stop that one and then go to the next one? There we go. So thank you for the first one. And now, based on your generation, we wanted to ask, have you been to your retail branch since the 23rd of March? And you can see where we're going with this one, because clearly we won't be able to go to our retail branches for the next 4 weeks. So it was just interesting to know what percentages we've had of our audience actually going into a physical branch to conduct some kind of banking transaction. And really, personally, I don't go into my branch anymore now. The only time I have to do that is if I give given a check, or actually have to put cash into the bank, I guess, is the only 2 times that I would go into a branch. So looking at those percentages there, seems to be quite an even split, actually, which may be a bit surprising. Maybe we was expecting less people to be going in than before, but actually it seems that the branch network is still performing a task there, doesn't it? From some of the responses, there seems to be slightly higher percentages of people that haven't gone in, but actually not significant. Okay, that's great. Okay. Thank you for audience for your engagement on that one. Always good to start with a couple of polls. So what I'm going to do now is if we just move the slides away, and I'll bring up the audience. I'm going to bring the slides in and out of this today. So moving into kind of the topics of discussion, and Wendy, I've singled you out for the very first question. I hope that's okay.
That's perfectly right, thank you.
So when we've been talking about kind of what's happened in the banking sector, it'd be a really good idea to get your thoughts and kind of maybe bring in that kind of the poll results. How you see that the banking sector has changed pre-COVID up until that point, that 23rd of March, should we say, and then what's happened in the last several months.
Okay, thank you very much, Rob. Well, first of all, good afternoon to everybody, and thank you for inviting me to take part in this event. I think it's been really interesting to explore the departure from the previous norms since 23rd of March. So certainly pre the COVID, there were some changes in the banking sector. We're all aware of that. We're aware that there's been a digital revolution, so the third industrial revolution, and that as a consequence of that, there's been some more competition in the marketplace. So we've had some new insurgents coming through, some fintech companies, some of whom have gained banking licenses, some who have been encouraged by the regulators to actually come up with new digital technologies and new ways of conducting financial services. Some of them have worked in partnership with the incumbent banks, but some of them have gone alone. With the incumbent banks, we've had a situation where there's been a dramatic reduction in branches. So when I started out in banking in the 1980s, we had half as many, again, branches in the UK. So there's been a 51% reduction since the late 1980s to 2019. And in fact, that trend has continued. We've got that 3,000 branches have closed since 2015. TSB made some announcements recently that they're going to close some more. And indeed, we've got the news, so the other news, which political or otherwise, depending on your viewpoint, that Lloyds are going to be laying off staff in the retail network. So presumably there will be a further closure in branches. But what are we actually faced with at the moment? At the moment, we've got about 10,000 branches available in the UK. So I'd be interested to hear sort of what the branch network is like globally, but certainly in the UK, we've got about 10,000 branch bank and building society branches. And that equates to about 1.7 branches, you'll be glad to know, per 10,000 people. This is a cause for concern because they're excluding some people from the financial services. So they're becoming financially excluded, and those that are financially vulnerable also can't access those services. But back in the 1980s, we had very much the state of play where people conducted their transactional banking, like you said earlier, Rob. You've got a check to pay and you used to go to the branch. The good news is you don't anymore. You can scan it on your mobile phone. Or if you've got cash, you definitely need to have somewhere to actually deposit that money. What happened from 2007 is that actually the number of ATMs also reduced. So again, further reducing people's access to cash. And this is a cause for concern.
Yeah.
The reason we came in with the demographics question was that I was really interested to look at how people are accessing their banking now. So if we say that most people access via obviously the internet, but also the mobile phone. In 1996, mobile phone ownership was 16%. By 2006, it's 80%. So I'll just let that land. 2006, 80%. How many people have bought mobile phones during COVID? How many people have bought laptops during the pandemic? Because we have now relied on our laptops. But from 2019, the data tells us that actually 79% had access to a smartphone. So we've migrated from the old style mobile phones to a smartphone where we can conduct our financial business. But it is primarily, you're looking at those that are born from 1980 onwards, so who are now up to 40, who have got smartphones. 100% of that population, if they have a mobile phone, it's a smartphone.
Yeah.
Those that are aged, the baby boomers and above, those aged 60 and above, that falls dramatically to 40%. So again, you can see that there is a real key reason why banks need to actually split their demographic segments and pay attention to the needs, wants and aspirations of those people. It will be interesting to see how many of those aged 60 and above are now transferring to smartphones. I was talking to Rob last week and I was explaining how my 87-year-old father literally last week migrated to a smartphone. And he's very happy with it, despite all the queries I've had on it. And he does his banking via smartphone. So you certainly can teach an old dog new tricks. He won't thank me for saying that. But so what's changed in the banking sector? We've had the reduction of branches. We had ATMs reducing. We've had banks being very concerned about the insurgents. They're concerned about the security risk. Some of them possibly were rubbing their hands with glee when some of the insurgents failed, but then they've failed by the same measures themselves. So I don't think any of them can sort of sit on their laurels on that one. They talked about becoming digital, but they didn't actually become digital. They did it incrementally through digitization. what we're now facing, and I think I'm going to have to sort of wind up a bit before I get too enthusiastic. What we're now facing is that, according to the Marqeta report, 80% of banks said that they were in a situation where they are going to have to really evaluate their digitization, and they really are going to have to go digital. They're talking about simplifying their products and services. One thing's for sure, they weren't prepared for the transition to online and mobile banking that occurred as a result of COVID.
That's great. That's really in-depth. Thank you, Wendy. And good context, really. A remarkable reduction in the number of branches. And as you say, the kind of mobile technology now taking over from how people engage with their bank. I've kind of, I'm in that category now. I wouldn't even know what a branch was like if it wasn't having to to go in. So I think that kind of segues nicely into digital transformation. And Chrissy, I kind of wanted to ask you about your knowledge and experience around kind of the new players and new technology that is coming into the industry and how that's either disrupting it or supporting it.
Yes, sure. So thank you again, everybody, for participating, and thank you, Rob, for inviting me to this great event. And it's an interesting question because somehow it's the start of what Wendy was just finishing off. There has been a technological transformation over the past 10 years. I mean, mobile banking is not something entirely new, neither online banking. It's what has, though, changed is that over the past few years, the way the banks view their infrastructure, they have obviously their legacy systems, and that makes it harder. But it's there is an increasing need of how the infrastructure and the way banks and the banking sector do business. So we have seen incumbents, they would be called so incumbents a few years ago, like neon banks in terms like Revolut and Monzo and N26, trying to compete with the existing big banks by attracting the millennium or Generation X type of customers that don't go so much into the bank, into the branch, and they do want to use online digital technology. And they were focusing on the UI more and the customer journey and experience. But moving forward and increasingly, as we have seen during the pandemic, it has become apparent that also the major banks have to onboard more of their existing customers on these digital means, and that's moving into other generations like the baby boomers and the older generations, just because of the need that they can't access anymore the branch. And that means that there is also an increasing internal need of the bigger banks to think how they perhaps can collaborate with fintechs rather than compete with them, because they have complementary services, or start transitioning, doing a digital transformation, looking into digital transformation projects internally to move their infrastructure from their legacy systems to cloud-based type of services. So there is an increasing need of like infrastructure as a service, payment as a service. They're even talking banking as a service. This digital transformation and need is pressing actually this collaboration between the different players, especially during this COVID and pandemic period. And this also is reflected within the UK with the FCA trying to support these type of projects and this type of companies. So, for example, the FCA over the past few years has opened a sandbox to help fintechs test their value propositions. But now they have actually also added new environments like the digital sandbox, and there is the first cohort joining now in November, whereby they want to move and focus on identifying financial vulnerable customers, financial vulnerable SMEs, and also enhance the fraud detection. So with moving into the digital world, there are also increasing risks that have been recognized, such as fraud. APP fraud is one of them, and social engineering scams, and therefore the banking sector and financial services have to actually find new techniques to risk mitigate them. And the more data through this digital say move from branches to online, there's increasing amount of data that has to be processed, has to be safely stored. So there are also increasing needs that have to be met, like data security, data protection, cybersecurity. So there is more moves. There's like more needs or different needs as we move through this phase. And it is aware, the regulators and the sector is aware of it. So I think there is more pressure on focusing on these new technologies that can help it. So, for example, we have over the past few years blockchain and these distributed ledger technologies to be able to audit and track and monitor the data. Then we have got increasingly more fintechs looking into using AI. Artificial intelligence has existed for many, many years, but now the technology and the computers are more powerful to be able to process this type of data and being able to identify patterns and trends. But again, there are also additional risks that come with it. So it's like a moving wave, new technologies, new solutions, new risks, and it's a very exciting era.
They do say the only constant is change, Chrissy. So I think this is more pertinent than most. Thank you for that. That was really insightful. I'm trying to multitask at the same time and read some of the questions that we've had from the audience so far. Maybe this is a good one. Maybe I can put to you, Helen. James from James. Hi, James. James Bender. He's asked about, has anyone had any experience in converting customers to cryptocurrencies and bypassing retail banks altogether? So, Helen, I don't know if you would like to try and answer that one.
I'm not, thanks very much, Rob. I'm not the crypto expert, but what
Okay.
I will say that the other day I was speaking to the CEO of Onyx, which is JP Morgan's new division. JP Morgan Coin is now being used with PayPal, and that's the first time that someone is commercializing this to see how it works. They kept that under wraps until they were ready to go forward with it. Clearly, I mean, there's a question, James, it might be the same James Spender, on the big tech. And I'm listening to both Wendy and Chrissy. What has been evident from the beginning of what we called fintech and then moved on into the fourth revolution with the fintechs on from the third, is that the fear for incumbent banks was not coming from the fintechs necessarily. They needed a lot of money. They're funded by institutional VC, PE capital, a lot of money to be able to achieve scale. And scale is something in terms of customers that you might have 30 million customers if you're a Barclays Bank and a 300-year history versus a 5-year history and 10 million customers that you've accumulated by fancy marketing. That was never going to be the fear for the incumbent banks. The fear was always coming from big tech, from PayPal, from Apple, from Google, from Alipay, from all of the other embedded finance options, because ultimately fintech is technology that satisfies the financial needs of the consumer, but in a way that we don't realize it. So the ultimate in fintech is that it's happening in real time. And this is something that our incumbent banks are concerned about. we are losing branches. We do have other solutions like the post office, mobile banks, a new business called One Banks, which is opening up agnostic kiosks in town centers in case somebody does dare to give you some money and you want to go visit somebody. They're also teaching people to be more digitally adept. And that has been going on for a long time. And there is a shift in terms of digital. There's been also a debate in the questions on what is digital, what is a smartphone, what is mobile. I think there are literally, of course, there are parts of Africa, for example, where I'm talking to customers who are not on a smartphone. They're just on a mobile phone. And so it makes it more difficult for things like digital identity. But I think we assume that we're talking about smartphones when we talk about digital banking, mobile banking apps from a bank. And it's true that during the pandemic, 12%, I think it was 12%, I think, of the population in the UK downloaded and used their mobile apps for the same time. So although we are worried and we see the possibility to partner with fintechs for bringing in the technologies, of course, most people in the incumbent world know now that partnering with the nimble, agile tech makes sense, but it also for the fintechs gives them scale, it gives them trust, it gives them credibility in financial services, because it's not an accident that around 40% of people might put their full pay with an online or a digital bank, but most people are still putting it with their incumbents, even though they are banks with banking licenses and the money is protected. There is an element of trust. And when people are frightened like they are now, it's even more important that they can trust somebody. They may not like them, but they can trust them. So I think that's something the partnerships are very evident. And we see it more, I suppose, with the advent of open banking in 2018 here and PSD2, and open banking is now moving around the world, where, Chrissy, you alluded to data. And now we know as consumers and as small businesses that we own our data. The banks have been sitting on a data mountain forever, but not using it well. And the power is in the hand of the consumer from open data, open banking, and using our data to our own advantage, which is rapidly moving on to open finance and embedded finance. So everyone's going to have to be keeping up, which is one of the reasons that studying with us is such a good idea. These things are moving at the speed of nuts. We've only been talking about open banking for a year and a half, 2 years, and we're talking about embedded finance and open finance, right? So it's moving quickly. And open data, that's right. Everyone's sharing their APIs, including JP Morgan. So this, it has moved at great speed. It always challenged the basic business model of an incumbent bank, which is an inside out. We create products, we have profit margins, we have sales targets. And somewhere around the 2015, 2014 time, that switched and it became outside in. The customer is driving, particularly the millennial, with a smartphone in their hand, is driving the traffic the other way. This is what I want. I want speed, I want low cost, and I want it when I want it in an omni-channel way. And that has changed and challenged the business model for the incumbent banks. Heavy cost infrastructure like branches, obviously, were part of the transformation. Although if you ask Metro Bank, they will say that 80% of their rent is covered by their safety deposit boxes. And then a fact that everybody has become, or everyone does have a phone, that's making it just a little bit easier. I still think we're in transition. I don't think this is the end. I think, the next 5 years will show something else. This is just literally a phase. But incumbents have been given the opportunity to step up their game and respond in a digital way, particularly with COVID, right? This was with all the stimulus packages that have gone out. They fell a little at the first hurdle, and the alternative finance platform providers stepped up, and some of the challenger banks stepped up. But this is the moment to recover that and to accept the fact that the digital solution is outside of business as usual for an incumbent. The existing or historical model of an incumbent has changed dramatically, but they had a lot of custom and a lot of cash behind them.
Yeah. Thank you, Len. That was great. And I remember when Metro Bank first kind of launched, was it 8 years ago now, maybe? Quite some time.
2010.
2010, 10 years, okay.
Yeah. Goes fast, doesn't it, Rob?
Yeah. As you get older, apparently, as well.
I know.
But yes, I remember the kind of traditional branch approach, where if you wanted to open an account, even more complex if it was a joint account, you'd have to have all types of printed ID and photos, and you'd go into a branch, you have to make an appointment. I think Renier on one of his presentations for us just explained how exasperating it was, really, for the hoops you had to go through for just opening what is a simple current account. And then Metro Bank came along, and it was all done instantly there and then, wasn't it? You basically come in, your ID's checked digitally, they print your credit card or your card in your checkbook there and then. So that kind of showed us what we actually want and kind of what we were actually getting.
It was version 1, wasn't it? Yeah.
And now what we're seeing is just that building and building in terms of the speed of being able to kind of transact through your bank.
And you don't need to go into a branch anymore, right? You can take a selfie, you can prove that you're alive, and you can upload some documents, and it's done. And this is changing all over the world. There's been some changes recently in digital identity regulations in the Middle East, for example, where you did used to have to go into a branch, and clearly this has all been exacerbated by COVID.
Yeah. And if I can add to that, if you were looking at the business account sector, we've got the situation during the pandemic where actually, particularly during lockdown, some of the incumbent banks were turning around and saying, sorry, we're closed to new business. We're going to have to concentrate on our existing business customers and support them. You've got HSBC who've launched Kinetic, which is a digital only provision for a business account. So you can open a business account through them, but only digitally. And a lot of the banks, there was a lot of media attention around, okay, well, if you've been made redundant, if you're on furlough and you're trying to set up your own business, suddenly all these brand new entrepreneurs couldn't open up business accounts with their existing personal account banks. So where did they go? They went to the new digital providers. And as you quite rightly said, Ron, it's so easy to do it.
Yeah.
You can get a business account up and running within about 5 minutes if you do it. So
Yeah,
it's an interesting change. And I know I go back to Helene's point about trust. And I think Chrissy was talking about it too. That is the key thing that I think every single financial services provider, whichever side or anywhere on the spectrum they are, you have to be customer centric. You have to think about what are the needs and wants and aspirations of our customers now and forecast forward. So again, yes, we've got to get the trust of customers to feel comfortable that yes, their money is safe wherever it is, that if they ascribe to open banking, that still they've got that security in play.
yes, and that's why I think also that also the regulators, and there was a question whether the regulators will keep up with the technological advances. They just have to keep up, because with this digital transformation, there are a lot of cybersecurity risks, and that means that the newer banks have the ability to build infrastructure from scratch. So there are a few banks that are focusing on that. So they are looking into being able to provide a seamless, not only front end of experience of digitalizing the identity by taking a selfie and a liveliness test to authenticate the consumer, but being able to securely safeguard this data. And it's all about data moving forwards and how you handle that data, and not only about the privacy, but how you securely prevent this data by being hacked, and how you use it, and how you transfer this data through APIs. And with open banking and open finance and open data moving forwards, this will be increasingly important.
Thanks, Chrissy. Actually, I'm just going to throw a question to all of the panel members. For Manju, thank you, Manju. What does the panel think about the potential of fraud, impersonation in digital onboarding, and how would a financial institution ensure there is no financial crime involved? I'm going to add to that as well, because I've been kind of keen to go back to the vulnerable customer piece and what you were saying, Wendy, about how banks are now going to have to really focus on how they support their customers digitally. How are we going to support the modern kind of generations, but also still serve the needs of the kind of the older generations that may not be able to engage digitally? It's a very big question, I know, but if anyone feel free to pick that one up.
Yes, I will go on this one. So as part of Calgera, I've been working over a year, the vulnerable customers, and we're looking into different segments. We are looking from the older generations, from 50, 60 plus, and then the vulnerable customers are also defined as those that have particularly physical or mental cognitive needs. So there may have some cognitive impairment. And they are defined also from the FCA regulation as with low financial capabilities or low financial ability to judge different circumstances, such as, for example, social engineering, scams, or fraud. And this is a difficult question, because obviously they will need some support. In many cases, they would go to the branch, and they may go with somebody who they trust or assist them. Digitally, this will be harder. So they will need to have new technologies. The banks will need to be able to detect and identify these financially vulnerable customers, or potentially financially vulnerable customers. And that's what also the regulator here in the UK, the FCA, is pressing on, because they are increasingly aware that and also during COVID, that this segment of customers has increased. In fact, one of the big banks mentioned that their customer base, who was defined as vulnerable, had doubled overnight.
Yeah.
So this means, that's why I also had put emphasis on security and infrastructure and cybersecurity. So they will have, the banks and the banking system will have to have an increasing awareness, training on these aspects. So that means like using their AI models, that they will be able, not only being able to detect fraud patterns based on frequency, or based on the amount of the transaction, or based on the pattern or the location. So perhaps it may be that a customer transacts, and then they can identify the location, and then the location, there is an outlier, and that will be a red flag. So these processes previously were done also manually, and they would have perhaps employees doing it, whereas this is now increasingly getting automated, and using technology such as artificial intelligence and machine learning to speed up and process more of these, and being able to detect and protect their customers.
Yeah.
Yes, if I could jump in with that, I think that he is absolutely right that we've got the technology, and increasingly getting the technology to protect customers in this way. But we need to also remember the counter side to that actually all the providers need to make sure that they've got digitally literate staff. So you've got some of the banks are now actively recruiting AI literate. You've got a situation of the staff now, if we're working in that sector, we have to get up to speed with what is available and how we work with it, and maybe come up with the old staff suggestion scheme of, okay, actually working in partnership with fintechs to improve the experience for everybody. I think the Calgera model is really fascinating, and I do encourage anybody. I know I'm doing sales pitch for Chrissy, but I wasn't aware of it until I was invited to the panel event, and I was saying that I would have loved, when I was a bank manager, to have had that capability, because to identify financially vulnerable people was incredibly difficult. And we know there's that issue now about moving away from financially vulnerable, also in terms of people who have mental health issues. And unfortunately, that is going to be increasing. We know that. So that's another area I think that fintechs have got a piece to play, where we can actually work in partnership and make security better for all of our customers. But we need to get that professionalization within the companies themselves as well. So doing the sales pitch, yes, if you do the certificate in retail and digital banking, that's your first step along that journey.
Yeah, thanks, Wendy. And no, don't worry, I will unceremoniously plug the certificate towards the end of this call. But hopefully everyone will see the real value of that. And yeah, I guess what we're doing here is addressing a problem statement, aren't we? Because the branch network's changing, how banks are engaging with their customers is constantly evolving. And the skills that you need to deal with a customer in a face-to-face environment is very different to that of a digital channel. And for the identification for, are they a vulnerable customer? And all the kind of associated risks. And I wanted to bring back actually into what you mentioned at the beginning, Wendy, about your dad and how previously, before COVID, he would be able to service all of his banking needs by going into a branch. He was capable of doing that. But now you're having to support him, aren't you, to kind of download the technology, to show him how to, go through the security options. So it is showing how who may not have been classed as vulnerable before is now in that category because of external influences such as the pandemic. So
absolutely. I mean, and I'm sure I'm not in the minority here, and I know we've got a poll in a little while to discuss that. But I think it's interesting because, in fact, I'll make a slight adjustment. He went over to First Direct about 15 years ago when it was the telephone bank. It's now evolving. It's not purely the telephone bank. But I think this is a key thing when we're discussing customers, and we sometimes get lost in, we must provide this, we need that omni-channel approach so that we can actually reflect the customer's needs and wants at that time. So when he transitioned from branch banking, very reluctantly, but because he was let down, there was a fraud on his account. I'd forgotten that. There'd been a fraud on his account. And he was one of these people who remembered he had to keep a set amount in credit in his current account for it to operate, and was absolutely horrified with the way he was treated. So he transitioned to First Direct, and then he likes to have that conversation. We'll sit there, and he's probably the First Direct operator's nightmare because he will not adhere to a 2-minute conversation, and you can tell I've inherited that tack. It's basically, he likes to say, oh, so where are you now? He likes to have a conversation. He likes the connection.
Yeah.
If you're doing transactional banking, for the most part, we're not worried about the connection. If I'm going to transfer money, pay a bill, I don't need to have a conversation. But there are times where I've been on the computer all day, I've been on my mobile all day. Do you know what? I don't want to look at a screen, and I will pick up the phone. And personally, I find it so immensely infuriating when they say, do you know you can do this on your app? Yes.
It's all steered to not speaking to a human being now, isn't it? It very much encourages you to go through the telephone tree and go to our website. I actually now find that getting through to any organisation, not just banks, it's actually a real hurdle now, or a challenge to actually press the right numbers or not, or just find your way to an actual person. And actually, Derek Goodsell has sent a message saying, how do you maintain a personal service in a digital age? Or is that the price that we now pay? Basically, we're losing that personalization.
I just think that it really depends, and it varies on who it is, whether it's a business customer or it's an individual customer, and whether or not you need a basic process that you don't really need to speak to somebody for, and it would be, the relationship manager will be reserved for something that's a bit more meaty. In the business side, I think in Australia and in Canada, there are a couple of banks have just hired literally like thousands of relationship managers. So the geography, because they're out and they're more rural, and I revert back to saying we have other options here, but they are hiring relationship managers. What the managers need, and what everybody needs going forward, is intelligent data that is driven with smart metrics. What are you measuring? Because forensic data for all of us is not going to be useful after COVID. We don't need to know what was in my limited company accounts last year to talk about what's going to happen with me in, for example, the stimulus package I have or the lending that I have going forward. We need things that can work forward. And that's where some of this data comes in a valuable way, working with the fintechs to be able to set up some systems that can help the banks to look forward. There was a question in the channel also about digital identity and making sure that there wasn't fraud in ID. There are so many biometric solutions in digital identity on the market. I have stopped counting them, and I expect to see a lot of consolidation in that market. There's plenty out there that will stop, although of course there are going to be some that slip through the net that stop the digital identity fraud. And I saw there was another question about regulation slowing down innovation. Now, you might have said that in the 2010s, 12, 13, but the FCA here has led the way. We have bridges across the world in terms of regulation. There was an announcement today on a cryptocurrency or digital currencies coming out of the UAE. All of the regulators are now trying to embed the regulation in the creation of the product and the service so that they don't fall behind. But also remember, a regulator is there to protect us, right? The UK is unusual in the sense that regulators are there to also aid the commercial gain and channels for the fintechs and the banks. But the main thing is to protect the consumer. And if they were not doing their job and slowing things down a bit so that we can actually try things out, the public would be very upset if regulation just kept turning a blind eye or going through quickly to either jam or to aid the flow of regulation. So I think you have to look at these things from all sides, as it were. I'm trying to keep an eye also on the chat while you were all chatting as well.
Yeah, and I agree with Helen that you have to keep an eye on all sides, and also with Wendy with focusing on the customer. So it's not only about using technology; it's also how you I mean, the fintechs or design the technology. So there was somebody making a comment about vulnerable customers, and they're vulnerable customers with different capabilities or disabilities, like visually impaired or people with problems with hearing and need hearing aids. And therefore, it's very important from now onwards when tech is built, that they take into account, for example, good coding practices, being able to always include voice to text, so that they are able to aid these people that have different disabilities and need this type of functionality. So by transitioning into this digital age, one has to look at from different angles, and from the safety angle, and from the tech angle, and also from the customer's needs angle, and how it can become as inclusive as possible. And although it may start with a smaller segment, this can increase by capturing into the technology and into the processes and the design. Like some banks may transition into increasing, as Helen said, customer relationship managers or call centers, that we'll be able to have an increasing knowledge on financial products rather than just basic functionality.
Thanks, Chrissy. I'm just conscious of time. We've raced through the last 50 minutes already, so we've only got 10 minutes left, and there's a couple of polls I'd still like to ask the audience, and then pick out a few more questions from them, if that's okay. We have this slide here really just to give a bit of a positioning statement. So how's COVID impacted retail banking? And clearly the technology, the direction was already there. It's just kind of sped that process up. But building on this vulnerable customer piece, which I think is really important, we've seen also a huge rise in scams related to COVID-19. And I think, Wendy, you were mentioning one that you had the other week, and how criminals are now targeting financial products. So we've kind of got this increased vulnerable customer segment, and obviously the scammers and fraudsters out there now trying to target them. So it's not a very good combination in that respect. But just to get some input from the audience, we wanted to just ask you this question, if Rox wouldn't mind bringing the poll up. But basically, we wanted to know if, like Wendy, you're now having to look after someone that you'd class as vulnerable, that maybe were able to kind of support their own financial needs, their own banking needs without any support. So yeah, we're around about, well, could it be 1 in 3, nearly 1 in 2 people, we're about 45%. That's actually climbing as well. So we're kind of seeing nearly a 50% increase in people that are now having to look after a vulnerable customer. So similar to Wendy. So that kind of just shows really the difference already that banks are needing to consider. You know, they don't want to financially exclude their customers. And equally, they want to make sure that they're confident, they're supported. So
I think that's an interesting point in terms of if you are a customer, so myself, and I'm stuck there trying to actually organise banking services for my father. If he's not treated well, that's going to naturally influence my choice of provider and about whether I go elsewhere. So I think it's something that the banking sector as a whole does have to pay real concentration to. And we've got where we are political. We've got the 49-51. It's like the Brexit all over again. We've got yes with 49% of us at the moment. And we did have a fairly good spread of demographics at the beginning. So if 49% of us are now dealing with this, it would really pay dividends, I think, for the banks. They were originally looking at business continuity models, but now, as Helene was saying, they need to cast forward and they need to pay attention to this sort of data and think about, okay, what can we provide, and consider the knock-on effect.
Absolutely, definitely agree with that. But that's actually more striking than I was expecting. I was expecting maybe 1 in 4, but we're actually 1 in 2 with that poll. So yeah, thank you everyone for participating in that one. Let's just go to my slides. I think I've got some. So this is where I'm going to have to talk about the Cert RDB qualification, but hopefully the audience will find this really useful. We've kind of talked about how we're seeing a need for reskilling employees. We know that the banks are reducing their branches, reducing their headcount, but actually they're also reskilling employees. So if they were working in a branch, they may be working in a contact center or working in a role that's more digitally focused. And that's where the Cert RDB qualification is going to come in really useful for banks, because actually it looks at how the retail banking landscape currently sits, the direction of change and all of the topics we've talked about. And it has a real digital focus now. So actually people that need to reskill themselves, there is a qualification that we have produced to really address that issue. So in that kind of context of professionalism, it'd be good to get the audience's input to see where they are in terms of their perspective of professionalism in the current pandemic. So as an individual, do you still consider continual learning as important as ever? Is it something that you may not have considered as be that important, but actually now with jobs on security, or actually you need to kind of learn new techniques and skills to be able to perform your role? It would be really just interesting to see where people are. I know personally, I'm definitely thinking about all the time how I have to kind of continually learn to remain relevant. Yeah, there's lots of ways of doing that. And obviously we have qualifications and training programs here at the LOBF for that. But looking at this poll, about a third of people saying actually that was already important, which is great. And so therefore their perspective hasn't changed. Over half the audience are saying, kind of alongside what I feel, it was always important, but more so than ever now, kind of remaining relevant and constantly evolving as an individual and learning those new skills and knowledge is really important. And then we've probably got about 15% of people there that are actually saying it wasn't an important factor for me before, but actually now it is. So we can see a general shift in the mindset there of the audience. Actually, people out there are mindful that in these uncertain times, we need to continually invest in our professional development, which is actually a very difficult thing at the moment, because some of us are either furloughed, some of us are going to be working, but making up for the people that aren't working. So busier jobs, longer hours. So actually finding time to professionally develop yourself is actually probably even more challenging than ever before.
Yes, can I pitch in here, please, Rob? I mean, I find it really interesting. When we're talking about reskilling, that's really important, but there's another term about upskilling. It's about developing the skills that you already have. And I really feel that if we're going to be in a world in the future where we are operating with AI, having this cyber technology and working in partnership, we need to upskill our own. If you look at the Megatrends report, it's all about globalization, technology and data, but primarily it's about the demographic changes, and we need to consider that going forward. I really loved somebody popped up and said, your poll was a bit limited because it didn't say about if you considered it was less important altogether.
I was being
I mean, I
nice.
would never consider that. My students would always say, I always say, no learning is ever lost. You will be amazed, however, how regularly things crop up from time to time. So yeah, we can consider that. So hands up on that one. And I do feel, certainly in my coaching experience, that what I'm finding is people are actually coming to me and now saying, yeah, I want to do something different, and how do I do it? I think if you work in a human resource function or you're starting a new company, you've got to keep that professionalization going.
Yeah. It's even harder at this moment in time, isn't it? But actually, it's harder but more important. Conscious of the time, and I know there's some questions waiting there, so I'm going to quickly whiz through my bit. There's a 2-minute video that I really want to play to everyone, which just really launches the new certificate in retail and digital banking. This is what we brought out to industry last week. Helen and Chrissy, thank you for your input into this. Helen's actually on a lot of the video for the new certificate, and this is really aimed at kind of the people working in a typical retail banking branch network or call center, and really addresses the new digital challenges and skills that are needed by the modern day banker. So I'll play you the video for that one. There's some other bits that we've been working hard on here at the LIBF. What we'll do is when we send the kind of answers to all the questions, I'll provide a bit more information for that. But one of the big things we've achieved here at the LIBF, and it's not common, is that we've managed to convert all of our qualifications over to remote invigilation, which is a big digital push, and it allows our students to now sit their exams from home. So in this kind of lockdown at the moment, if the test centres had been closed, they would still be able to take their exams from home. So that's a bit of an advance in technology from us here at the LIBF. But I'm going to quickly play the video, and then we will go to any time for questions. If people want to stay on a little bit longer, that's absolutely great. I know maybe some of our panel members can't, but I'll be happy to stay on and answer any questions once the video has finished. So I will press play. There we go. That was our snazzy new video for the new qualification. So if anyone is interested in finding out more about that, then please just email me on that slide there. Oh, sorry, just changed on that slide there. So we are bang on 2 o'clock. So first of all, I would just like to say thank you very much to all of our panel members. You've been great, a really interesting conversation. I think we could have gone in many directions and covered a lot more topic areas. So we did well to get everything in that we did in the 2 hours. Appreciate we're now into 2 o'clock, so if the panel members do need to leave, that's absolutely fine. I'll happily stay on and answer any questions that the audience has got. And if we don't get to answer those today, we can then answer those post event and send those around to all of the audience. So thank you everyone for attending. Yeah, I'll stay on for a few more minutes just in case there's any questions.
Thank you very much, Rob. Thank you.
Thank you. Bye.
Thank you, Rob, and
Rob.
thank you, everyone.
Bye-bye.
Bye.
Bye.
Oh, lots of thank yous coming in, so that's really nice to see. No questions. I think everyone's got to rush off probably to their next meeting now. So
I found there was quite a lot of discussion about the human touch and how people appreciate that human touch in whatever shape or form and how that can be replaced. And it can be replaced or enabled even. And then there was also a bit of discussion about treating customers fairly, which I was personally delighted to see, having taught that for many, many years. And I think it was, so one of the participants was turning around and saying, banks really need to pay attention to it rather than just give service to it.
exactly, yeah.
Right.
Oh, sorry, that's good timing. My connection to the internet's just gone unstable, so perfectly timed.
Right.
Yeah, okay. I think we're okay, Wendy. I think everybody's leaving now, so
I will say adios. Thanks ever so much, Rob.
that's been great. Thank you, Wendy. I will leave the slide up there with your contact details on so people have got that. I think we send them round afterwards as well. So
Right.
hopefully
Okay.
you'll get some interest.
Lovely. Take care then. Speak
You
soon.
too. Thanks. Bye.
Bye.